Our next guest is going to weigh in on crypto regulations, corporate governance, and more. Joining us now, SEC Chairman Paul Atkins. Mr. Chairman, I see where you are right now at the New York Stock Exchange. You're going to celebrate, or at least talk about, America's 250th, which is coming up next year. And there's a ceremony at the opening bell, and I was kind of trying to tie together what you do, what we talk about on this show, and how it relates to America's story. And it's capitalism and the rise of the United States have been just inextricably linked. And when you think of the U.S., don't you think, I think freedom, free, because it was such a novel concept, liberty, when it happened. And we're talking about free markets. It just goes hand in hand.
It does. Thank you very much, Joe, and thanks for having me today. So I'm really up here in New York today at the New York Stock Exchange and later on at NASDAQ to really celebrate what you're talking about. We have the 250th anniversary of the signing of the Declaration of Independence next year, which, like you say, is all about liberty and individual freedom and the right to be secure in your property and to pursue happiness. But the thing is that the capital markets have been the engine behind the development of all sorts of innovation, investors risking their money for entrepreneurs to develop their products. And America, in fact, was an investment before it was a nation, because the English investors, British investors, put money into trying to start the settlements, North Carolina, which didn't work so well, but then came others at Jamestown and afterwards. And so they risked their money to eventually build the nation that we have to celebrate today.
Right. Philosophers have written about the leisure class, and we get to a point where, our academics look around and take everything for granted, and they're able to actually start talking about things like socialism. And it's happening again with our young. I don't know where we're going wrong. 51% think socialism might be superior to capitalism. Maybe they don't remember it. The millions of people affected over, through history, through those ill-conceived notions. What are we doing wrong, Mr. Chairman?
Well, I don't know. I think the main thing is to, focus on the positive, focus and teach people, how we got to where we are today. And obviously there are problems. Every human enterprise has problems. Nothing's perfect. But, we've made huge progress in 250 years, individual liberty for all, and, the prosperity that we enjoy. And that, again, is because people are investing their money because they see a possibility of profit, yes, but also, it lifts all boats, frankly. The developments that come out of risk-taking are huge, that we've developed over the years, airplanes now looking at space and maybe colonizing Mars and things like that. So risk takers are there, and young folks are taking risks as well. So I wouldn't so much focus on on the isms as much as what is driving our forces. And so here, with respect to the United States capital markets, I want to make sure that we're modernizing our rule book, making sure that we are keeping pace with where we should be as far as ease of raising capital. We today have more or less half the number of public companies that we had 30 years ago. And so we at the SEC are taking steps to address that, try to make IPOs great again was what my goal is. And so we're kicking that off as well here in the new year.
Mr. Chairman, we've talked a lot lately about how gambling and investing are blending in some ways. You see it with the gambling sites, you see it with predictions markets, and I realize that's the CFTC, not your purview in terms of the prediction markets. But we even talked yesterday with Amy Silverman, who just talked about how you do see much more activity in these future markets on things like options and puts that expire within a day. What's your thought on that? Because your job is to make sure that investors are protected. Is there too much of a blend between investing and gambling, or do you think this is something that's manageable?
Well, I do think it's manageable, and I'm focused on the capital markets, and I'll leave my colleagues at the Commodity Futures Trading Commission to look after the futures and derivatives markets. And so, but risk taking, there is a continuum from, from more long-term things to more short-term as well. But that's inherent in humans to take risks, and others more embracing of it than others who might just stick their money under their mattress. But what we want to try to focus on, and what I hear when I travel abroad in Europe and Japan, for example, is everybody looks with envy and at our capital markets, what we have achieved here, and the risk-taking attitude, the investment culture that we have ingrained. And that really is lacking in other cultures. And so that is the thing that is a great asset for the United States that has built our capital markets and has provided capital for entrepreneurs to build towards their dreams, and then to have their investors share in those in building those dreams and making products that people want and people need and people are willing to buy and use.
On the proxy advisors, shareholder voting, and issues like that, it almost looks like you are trying to roll back a lot of the what some would think were ill-conceived notions of ESG, DEI, et cetera. You got shareholders that represent less than a percentage of a company's outstanding shares, bogging down management with proposals. You've got passive investors like Vanguard or BlackRock, where the CEO can actually say, gee, this is the way I feel about these social issues, and I'm going to vote the shares of a passive investment with what my interests are in mind. How did we ever get to that point without thinking this is insane?
Well, it's interesting. I mean, things have changed a lot. When I was, I've been now at the SEC 3 times, over the last 3 decades. But in the early 90s, when I was there for 4 years, the individual investors made up more than half of the market capitalization of the U.S. markets, holding stocks directly. Now things obviously have changed. They've gone to holdings. People have ETFs and mutual funds and all sorts of other things. So that's great. And, the people are invested in the marketplace, saving for the long term. But I think it's time to modernize our rules. And things have been allowed to, if you've ever had a boat and have barnacles on the hull, it's time to scrape off those barnacles and make our ship be able to sail, quickly through the waters. And so that's what we're setting out to do at the SEC. And they're basically 3 things that we're looking at to try to make IPOs great again. One is to modernize our rule book, to make sure that our regulations are fit for purpose, to help small companies and large companies attract capital. Second is to look at our litigation situation, with respect to, the strike suits and other sorts of frivolous actions that really impede, I think, people from wanting to be public. And then finally, the corporate governance issues that you were alluding to, where we have things that take so much time, various precatory proposals and whatnot that are, that really don't get adopted by shareholders and create, I think, more noise and are weaponized by particular special interest groups and that sort of thing. So we need to get back to basics, make sure that our rule book is fit for purpose and helping to make our capital markets as efficient and growing as possible. Can
you do what needs to be done with crypto without legislation? And do you think that can happen before the end of the year?
Well, we'll see. We're working with Congress, and we're providing what we call technical assistance to them regarding legislation to make sure that they're staying on what makes sense and that meshes with other laws and whatnot. And we'll see. I can't prognosticate that, but we have enough authority to drive forward. I'm looking forward to having an innovation exemption that we've been talking about now. We'll be able to get that out in a month or so is what I'm hoping. We were impeded a bit by the government shutdown. Obviously, we couldn't work on things during that time, but we're on track, and we will be able to forge forward with the crypto area and make sure that we are able to embrace this new area of innovation that for too long the United States basically is just pushed back against. And so I'm looking forward to having rules that are focused on helping that sector of the economy move forward.
Come up and make IPOs greater. MIPCA? It just doesn't have the same ring. What can we do about that?
Yeah, right. So my PIGO maybe. How about something like that?
That might be. Yeah, it's amazing that the number of public companies that we don't have anymore. Is that the rise of private equity? What is that? And is it healthy?
Well, I think many factors. Obviously, it's been the rise in the private markets are much more fluid and liquid than they ever have been in the past, with institutional money going in there and others. And so I think that's a good thing that provides, a good outlet for especially venture capital, obviously, and private equity. But again, when you go back and look at how we have, we're down 40% or so from, 30 years ago of the number of listed public companies. We need to look back at why that is and what causes that. So one is, yes, there's an alternative. But secondly, I believe that, again, all these barnacles that have gotten on our hull, we need to get those stripped off so that things can be more efficient and attract capital back to the public markets.
You're down there. You'll be here later, right? I mean, you're not leaving the NASDAQ out, obviously.
Yep. We'll be at the NASDAQ later this afternoon for closing.
Oh, good. Okay, opening, closing. Perfect. All right, Chairman Atkins, thanks.
Thank you very much, Joe. Thanks.